let's welcome on board our experts. We've got Naresh Mirani, Chakri Lokapriya joining in on the show right now. Naresh, first a word on the index and more importantly, how much more weakness do you see on Reliance Industries in particular?
So overall, if you look at the chart for Reliance Industries, the stock has now given up all the gains from the start of the year. So in the start of the year, we were at 2600 to 2700 band. That is where it's come to. Back in 2023, if you adjusted out for Geofinance, the stock was closer to 2400, 2500. So not much downside left here, sub 2700 mark. I would expect it to find a base around 2650 to 2600 mark in the short term and then make a slow and steady comeback. And from the top, from 3200 to 2600 would be a good 15% plus correction. So a decent correction done, the second largest weight in the Nifty, creating pressure on the index. But overall, decent enough correction is done in the stock. We could make a slow and steady comeback after, say, from 2600, 2650.
Okay, so that's the take coming in on Reliance Industries, definitely under pressure. But Kunal, what's the view on ICICI Bank? That one is powering ahead, up almost 2% right now. You see further gains on this one?
Yeah, looks like, and it seems like finally the stock is finally finding its strength back again after almost like a 100-point correction from 1330 approximately towards 1230-40 mark for ICICI Bank. The stock is finally trying to make a comeback of sorts. It's lagged behind in this recovery phase in the last 4-5 days as compared to many of the other peers. So I think Kotak Bank is one of the strongest name, which has given a higher price rally as compared to the likes of ICICI Bank. But nevertheless, I think if ICICI Bank manages to scale past about the 1265 barrier, then I would probably believe that it should be trying to come back to the 1300, 1320 levels. So this looks like a formidable comeback, and with yesterday's price action move for the other private sector banking names, HDFC Bank, Kotak Bank, Axis Bank to a larger extent, I think this could probably be an indication that maybe the sector is trying to get back into a revival.
Right, okay, that's the take coming in on right now the markets. In the meantime, Reliance, it's managed to hit an 8-month low intraday, and it's seen a breakdown from that 8-session consolidation that the stock was going in with into its earnings. The decline, in fact, has been for a third consecutive week so far. Other than that, Chakri, wanted to ask you whether any earning has actually, or even for that matter, any of these quarterly updates have really sort of stood out, either on the upside or the downside?
One of the big trends that you're seeing is, consumer companies are facing margin pressure. Individual companies are reporting revenue growth, in line with inflation, about 6, 7, 8%. And earnings power is clearly not evident in most of the sectors. Credit growth, on the other hand, is 81 bonds. State Bank of India is going to raise for a few thousand crores. That's an indication of good, strong credit growth. So I think it's still banking, industrials where strength is still there, power. So it's still very selective. We can't buy like last year, and the other sectors still don't have the power.
But since we're talking about earnings season, and earnings which have come in today are HDFC Life, not very impressive when it comes to VNB margin. But what are the other internals like, and what's your verdict on that one, Gaurav?
Well, yes. When we look at HDFC Life's numbers, there is some disappointment that we're seeing. So first, when we talk about AP growth, it was actually healthy. If we look at first half of the numbers, it grew almost by 31% on a YY basis, which gives us an implied growth of around 27%. When we talk about VNB, there we saw growth of around 17% on a YY basis in second quarter. Again, it was in line with what the street is expecting. But again, when we come to VNB margin, which was actually the thing in focus, there we saw a little bit of disappointment. VNB margins have come down to 24.6%. which gives us that implied, if we calculated it at an implied level, for Q2, those VNB margins have fallen, and that is the reason why it is weighing on and the stock price right now. Apart from that, company has given some positive commentary for the company. What they are saying is that the private sector share for the company HDFC Life has increased almost by 60 basis points. They have also highlighted that when we talk about persistency ratio, there we have seen a little bit of improvement. 13th month persistency increased almost by 120 basis points. Solvency ratio is again at a healthy level of around 180%, and the top line growth reflects around 22% growth in the product mix. But overall, when we look at VNB margin, a weakness in VNB margin is something which is weighing in on the stock right now. As we speak, it is down almost 2%. Definitely waiting for how the commentary comes out for EVNB margin and the outlook for FY25.
Okay, so that's a take coming in on HDFC Life. Definitely some sort of a miss on some parameters, but HDFC AMC also just came out with its earnings. It's a decent show, at least as far as profitability is concerned. 577 crore versus 438 that they reported last quarter. The stock is holding up okay, in the sense it's off the highest point of the trading session, yes, and maybe the expectations were a bit more because the revenue growth has been strong at 38% year on year. You know, if I can quickly get you, Naresh, on the chart check of a couple of these stocks, HDFC AMC as well as HDFC Life.
So HDFC AMC is the promising one out here. The stock crossed into new all-time highs today. As pullback post the numbers, but the structures is still positive. Till the time it holds above 4,400 levels, would expect it to continue in this momentum on the positional basis. In the short term also, sustaining above 4,600 would be a good confirmation of a trend change above the new all-time highs. HDFC Life, on the other hand, this zone has been a problem zone for the stock. Back in 2021 also, the stock made a top around 750, 770. So it's a stiff resistance, needs to sustain above 770 to create a fresh trend change. The last time the stock was here was back in start of 2021.
Right, okay. HDFC AMC just reacting to its numbers, as is HDFC Life, down now almost 3%. The closing trades definitely a little bit under pressure, not quite the quiet start that we started off the day with. Those jagged edges haven't been quite deep, but definitely it's not been a smooth straight line. BPCL, ICICI Bank, Britannia, Bharti, they continue to hold up, as does Asian Paints. But Wipro has now slipped almost about 4%. It's pretty much undoing most of its yesterday's gains. Bajaj Auto down about 3.25%. There's Bajaj Finance, which is down. And metals is a basket as well. Tata Steel, Hindalco, JSW being some key pressure points. And Nalco as well, which is down about almost 4.5% as we speak right now. Reliance too at the session lows. It's drifted even further, a little lower than 2% on the futures at least. And then of course there's Bandhan Bank as well, which has slipped about almost 3% as we speak. Though on the flip side, talk about some of the winners from within the volume market. An MGL, Apollo Tyres, PVR Inox has shot up about 2.25%. Deepak Nitride is looking smart, and the entire OMC basket as well continues to hold up. Kunal, you think this move in OMCs could be short-lived, because we've seen pretty much of a reverse as well, when you had a spiral up in crude?
I think BPCL and HPCL, both of them are technically very strong right now. So IOC is the only one which is very weak, or relatively weak rather, out of the three names. But the moves for BPCL and HPCL are backed by strong volumes. And in fact, what we've also seen for both of these names is that consistently these stocks are bouncing off from closer to their 50 DMAs respectively, or forming a short-term bottom on their previous major swing lows, maybe plus or minus 0.5%, 1% as a buffer range for these stocks. So I think on the basis of the recent chart patterns, I would actually believe that this could be a breakout move for BPCL and HPCL. So maybe not at current levels. Looking at the market texture, the sectors which rally up higher, they generally don't get to see a follow through up move the immediate next day. So I think if these stocks scale down by say 0.5%, 1% odd over the next couple of days, that could be a good entry point for these names.
Okay, good entry point for these names. But take a look at crude, been very, very wobbly. Of course, it was below the $75 per barrel mark when we started off the trading session. Right now, it's inched lower than $74 to the barrel. Right now, around that 73.96 mark as far as oil prices are concerned. And globally speaking, you have the European markets which have opened in the red right now. So it's a cut of anywhere between 0.5% to 1% coming in. The US markets in terms of the pre-market are a bit wobbly. There's Dow, which is just mildly in the green, but Nasdaq futures are suggesting a bit of a downside. So overall, a bit of a wobbly setup that we have in terms of the global moves right now. But it's Hyundai IPO which is the biggest talking point in the markets right now. So Chakri, wanted to get a better view from you, if you have studied that one closely, as to what's your verdict on that one, subscribe or avoid?
Yeah, Hyundai is a well-known brand, not just in India, outside India. Within India, they probably have about 15 models. They are the second largest car company in India. And, they have the ability to grow both inside India and also benefit, the Indian company benefit from export volumes of cars manufactured within India. They're also investing, quite a lot into the new EV setups. So they're about battery storage, battery lineups. They also, some of the IPO proceeds are earmarked for that purpose as well. So with all this in mind, being second largest Indian company in the passenger fast-growing EV segment, will trade at about 23, 24 times at IPO price, which is, I think, a very reasonable valuation, and therefore, it's clearly worth buying.
Okay, clearly worth buying. That's the view coming in. Thanks, Chakri, for that. But in the meantime, there's a bit of a pressure on Divi's as well. And it seems like it's stemming from the fact that Novartis has lost battles in one of the FDA approvals. In fact, if we can, let's take it across to Varun, because he's joining us to talk to us exactly what the implication is of this one. Varun, tell us more on Divi's.
Well, so let me first take you to the news, because Novartis has lost the bid to vacate the FDA approval for its blockbuster heart failure drug Entresto, and this case was between MSN and Novartis. So actually what happened is, in the month of July, MSN has actually got an ANDA approval to launch the generic version of this heart failure drug, against which Novartis went ahead and they have filed a lawsuit against MSN. Earlier this month, the US District Court of Delaware has actually ruled against Novartis for blocking this drug, and now the federal judge has rejected Novartis' plea to stop the generic version of this drug. Now this is a big win for MSN and it is a loss for Novartis. Now how will this impact Divi's? Because Divi's is actually having a CDMO contract with Novartis, and Divi's actually supplies the API for this heart failure drug, that is Entresto. And if we look at the recent Kotak note, Entresto actually contributed around 8% of total sales of Divi's in FY24 and around 19% of its total CDMO sales. So it was a blockbuster drug for Novartis and one of the largest drugs in Divi's CDMO portfolio. And as per Kotak, this approval can lead to around a downside of 10% in the EPS of Divi's for FY26 and 27, and 3 to 5% downside for Divi's for FY25. So this is a big blow to Novartis and also a big blow to Divi's. But also remember, there are other companies other than MSM also who actually have ANDA approval for this drug, and they are Alembic Pharma and Zydus Life. So also keep a watch on these two stocks.
Okay, Pharma once again back in focus. Let's also get in some closing trades as well before we slip into another break. Kunal, what's on your list?
So Siemens is something which is looking attractive. The stock forming a flag pattern breakout on the hourly charts, breakout of that 7,750 barrier for Siemens would suggest a buy at current levels, and expecting the stock to come very close towards the previous major highs of 7,900, 8,000 plus levels.
Right, and Naresh, what about your closing ideas?
So looking at LIC Housing Finance, the stock has corrected from 800 plus levels all the way to 600. And this was the price point which it made almost the low around 4th June. So out there expecting a bounce back from here, keeping a strict stop loss below 618, expecting a bounce back to 667 and in the short term.
Okay, let's take a very quick break on that note. Thank Chakri as well for taking the time out and joining us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.